Welcome to the Hub's continuing 2025 election coverage. I'm Rudyard Griffiths. Well, today we want to weigh in on the Bank of Canada's rate decision. The Hub was there to watch it all. We were part of the post-announcement press conference. Our reporter Theo Argitis joins me. Theo, great to have you on the program.
Hey, great to be on, Rudyard.
Let's begin, Theo, by rolling some tape on your question to Governor Tiff Macklem.
Theo Argitis from the Hub.
Hi. What struck me about the scenario two, which is the escalation scenario, is that you're still projecting a moderate recession, not a deep recession, much more moderate than 2008, 2009, for example. How should Canadians think about the probability of a deep recession? And in that scenario where we have a deep recession and a stagflationary environment where inflation remains stubborn, what would you do in that scenario?
Okay, Theo, well, as usual, you've packed a lot in.
Tiff Macklem is glad to see you back as part of the press corps for his regular interest rate announcements. He clearly enjoyed the question. You did pack a lot in there, so let's unpack it together. Give us both the intent of the question and his response to the first part of it, the risk of a deeper than forecast recession. What did we hear from the Bank of Canada today, and why were you with that type of follow-up to the governor of the bank?
Yeah, let me just start by just adding some of the context from today's decision, which was essentially they paused the rate cutting cycle. So they've been cutting interest rates now essentially nonstop since June. Today's the first time since June where they've actually decided to hold on to the rates where they are, pause. And the second thing that they did today was they didn't produce a base case scenario for the Canadian economy, a forecast, a point forecast for the Canadian economy. What they did is that they just provided two scenarios, kind of one where the trade wars de-escalate and another where the trade wars escalate, and to give an idea of what could kind of happen in those two scenarios. But they don't have any confidence to kind of predict with any precision where the economy may be going. And the reason why I asked that question is because the kind of the negative scenario, which is the tariff, the trade wars escalation scenario, their projection essentially was for a recession in that scenario, but a moderate one. Essentially, they're projecting 4 quarters of contraction, which is a lengthy time to be in for an economy to be contracting, but the scale of contraction is much less than what we've seen in other recessions. 2008, 2009, the 1990 recession, 1982 recessions had contractions that were about 3 to 4 times larger than the contraction that they're forecasting for this, potential escalation of trade war. So that kind of surprised me a little bit because it's while and his answer was it's still going to be a serious recession, and all recessions are serious. There are no good recessions, but it did strike me or did surprise me that even in kind of a really bad trade war scenario, the Canadian economy isn't contracting as much as we did, for example, 2008, 2009, or
Right.
in other kind of deeper recessions. So, he acknowledged in his answer, he acknowledged that, they can, they're just assuming kind of, they're making some assumptions around how much, the U.S. tariffs will impact demand for Canadian goods. And he acknowledged that there are risks that things could actually go south even more than they project. But that's kind of the message from today's announcement, is that they really don't know. There's just so much uncertainty
Yeah.
out there, and they're just going to wait until things kind of settle a little bit.
What did you think, Theo? I know it's breaking news over the course of today, but Chairman Powell was out with an important speech today, kind of raising the alarm bells on basically a stagflationary scenario, saying that the American Central Bank, which has a dual mandate of employment stability, job creation, and fighting inflation, steady monetary policy, those two could be increasingly in tension with each other. Markets have reacted badly to this over the course of today. What do you see as the differences maybe between how the Fed is looking at this moment versus how Tiff Macklem? It's unique that we have both bank governors speaking on the same day.
Yeah, they're facing similar problems. They're both facing kind of a stagflationary environment, but in the Fed's case, it's much worse. For example, they are imposing tariffs on everybody, and the inflationary impact and the impact on economic activity will be much larger. So if there's a stagflation environment coming, it'll hit the U.S. much worse than it will hit other countries like Canada. So the situation is much more dire for the Fed than it is for the Bank of Canada. The other constraint that they have in the U.S., which is problematic for the Fed as well, is that they don't have they're actually trying to reduce the budget deficit in the U.S. where, in Canada, there is scope, for example, to provide some stimulus and support the economy in a situation where we do have a recession. That might not be available to the Americans. So it's much more complex in the U.S. And the U.S. also sets kind of the mark for everyone else. So, if the U.S. economy deteriorates, it's a lot of, there's a lot at stake there, much more at stake than what happens in Canada.
Finally, Theo, it's so good to have you there at the press conference with the governor representing the Hub. We're proud to see our organization putting questions to important public figures like Banco Governor Tiff Macklem. What do you think, though, Theo, about what happened today? In a sense, you're saying that the Bank of Canada comes out with like a kind of implied Goldilocks. There's a really bad scenario, but we're not predicting that. And there's a really mild, nothing burger scenario, and we're not predicting that, but we're not actually telling you what we're predicting. We're kind of like a lot of these companies in the United States right now faced with these tariffs. We're foregoing what's called forward guidance, where basically we have no profit projections for the year. Is that, I get why they're doing that because the future is murky, but surely, Theo, there's some trade-offs in that because isn't central banking all about guidance? Isn't it all about managing expectations? Isn't it all about trying to kind of channel and herd market participants around a kind of inflation target and employment target that is, in the bank's front windshield?
Yeah, usually that's true, Rudyard. But in times of uncertainty, it really is tough to know what the right decision is. It's just they don't have the confidence, and what they don't want to do is make a huge policy error, especially on the inflation side of things, because we're not too there hasn't been that much time since the last major policy error. That was just 2-3 years ago. So they're very sensitive to the idea of not making a policy error, especially on the inflation front. They've worked hard over the last couple of years to reestablish the credibility that they had lost, and so they're very cognizant of that, and they're going to be very careful.
Yeah. And just finally, Theo, when you think about the decision to hold on rates today, is that all part and parcel of, again, this kind of these, two divergent scenarios? We're not committing to either one. It could be really bad. It could not be. So we just don't know. So we're holding rates because I think a lot of people are feeling that this economy has taken a significant leg down. We just had, as you know, Ron Butler, a kind of one of the country's kind of seasoned mortgage brokers on, talking about the potential for a really deep sell-off in real estate in Vancouver and Toronto on the basis of thousands, tens of thousands of units coming onto the market in the next 12 to 18 to 24 months. I don't know, Theo, I wonder about this. How does the bank judge what people's maybe subjective feelings are, but nonetheless a sense that this economy, if it's not already in recession, is heading into some very, very, very stiff winds ahead.
Yeah, I mean, what they're saying is that they're not going to be forward looking, so they're not going to be kind of be make projections or forecasts of where the economy is going to be and then act accordingly. They're just going to wait for the data, and if the data do show, and they've reassured us that if the data do show, a sort of a dramatic downturn of some sort, then they are prepared to act decisively. So essentially, the message is they're going to be cautious until they see the data. But if the data shows that the economy is in fact deteriorating rapidly, they are going to move decisively. So it's more kind of, very kind of they are promising to be kind of aggressive if needed.
Yeah. Okay, Theo. Well, thanks for coming on the program, and again, great to see you back. Giving our governor of the Bank of Canada questions that he clearly appreciates. Fantastic to have you as part of the Hub's team as our managing editor for economics and business. Thanks for coming on the program.
Yeah, nice to be on. Thank you.